All right, let's just get right into it. This is probably one of the most frustrating questions in all of crypto, right? You find an amazing altcoin project, anything that isn't Bitcoin. You totally believe in the tech, the use cases there, and yet when you look at its price, it just follows Bitcoin. Why is that? Well, in this explainer, we're going to break down exactly what's happening under the hood.
I mean, you've been there, haven't you? Your project drops some game-changing news, and you're expecting the price to rocket, but nope. It just gets dragged right down because Bitcoin had a rough day. It can seriously feel like the fundamentals just don't matter at all. And look, that's a totally fair frustration, but the answer really gets to the core of how this entire market is built.
So, here's the punchline right up front. It's probably not a problem with your altcoin. This isn't about your specific project lacking value. The real answer is so much bigger. It's all about the basic plumbing, the fundamental structure of the crypto market as a whole.
To really get that structure, we have to start at the center of the crypto solar system, and that's Bitcoin. Its role is way more than just being the first one on the scene or even the biggest.
Okay, so this gets us to a really key idea, the reserve asset. See, in just about any financial market, there's always one asset that kind of acts as the benchmark. It's the most trusted, the most liquid, meaning the easiest to buy and sell, and it's basically the main door for big money to walk through. When huge investors want to check the pulse of the entire crypto sector, they look at Bitcoin first.
And this is the perfect way to think about it. Imagine a company in, say, Germany is doing fantastic. Their stock can still get hammered if the US stock market has a really bad day. Why? Because global money sees the US market as the main indicator for global risk. Well, the crypto market works on the exact same principle, and Bitcoin is playing that leading role.
So what that means is when Bitcoin is pumping, investors feel confident. They're like, okay, let's take on some more risk. And capital starts flowing into all the other more speculative altcoins. But the second Bitcoin starts to fall, that confidence just evaporates. The whole market pulls back because investors are running away from risk. And in crypto, everything is seen as riskier than Bitcoin.
And this is a really critical insight. For a lot of these big funds, they aren't sitting there picking apart dozens of different projects. They just have a bucket labeled crypto. So when they decide it's time to reduce risk, they sell the whole bucket. They're not going to waste time figuring out which altcoin to keep. They just hit sell on the entire sector.
All right, so that's the high-level psychology. Now, let's get into the nitty-gritty, the actual plumbing of the market that forces this correlation to happen second by second.
First up, we have to talk about liquidity. It's a simple concept, really. It's just about how easily you can buy or sell something without the price going completely haywire. If a market can handle big trades easily, we call that a deep market with high liquidity. If it can't, it's a shallow one.
In this chart, man, it shows you everything you need to know. The market for Bitcoin is like this deep, vast ocean. It can absorb massive waves of money coming in and out. But the markets for most altcoins, they're more like shallow ponds. They're just way more sensitive to any ripples.
So this low liquidity has a couple of huge effects. First, it means that any little bit of volatility in the Bitcoin ocean creates a massive tsunami in those smaller altcoin ponds. And second, and this is a big one, on a lot of exchanges, you can't even buy altcoins directly with cash. You have to buy Bitcoin first and then trade your Bitcoin for the altcoin. That creates a direct mechanical price link you just can't break. And then you throw this on top of everything, the algorithmic echo. So much of today's market is run by trading bots, and they're all programmed with a really simple logic. If Bitcoin moves, we move the altcoins. It's not a decision based on fundamentals. It's just an automatic mechanical reaction that happens in a split second, reinforcing that correlation over and over.
Okay, so we've got the structure, we've got the mechanics. With all of that in mind, how in the world are you supposed to think about your project's actual utility?
If you take only one thing away from this whole explainer, please let it be this. You have to be able to separate the two. The short-term price action, that's mostly just noise coming from the market structure. The long-term value, that's the real signal, and it's created by actual adoption, good tech, and real utility.
And look, this isn't some weird crypto-only thing. A fantastic tech company could be breaking profit records, but its stock is still going to get crushed during a major market crash. When the overall tide of the market goes out, it lowers all the boats, no matter how well built they are.
So, when you see your altcoin moving in perfect sync with Bitcoin, it is absolutely critical you remember what this correlation doesn't mean. It does not mean your project is worthless, it doesn't mean it's a scam, and it definitely doesn't mean its utility is fake.
It just means you're investing in a market that's still young, super interconnected, and figuring itself out.
Which of course leads to the big question. Is this just how it's always going to be, or is there a future where great projects can finally break free?
And the good news is, no, it's not permanent. The data actually shows that things are already starting to change. As the market gets more mature, that intense, lockstep movement is beginning to fade a little, especially for more established projects that are building their own unique ecosystems.
You can kind of map out the whole journey here. In the early days, everything is just tangled together. But as projects mature and grow, their own news, like a huge partnership or a network upgrade, starts to actually move the price, separate from what Bitcoin is doing. That's the path towards a future where they can become fully independent.
So what's the bottom line here? Altcoins follow Bitcoin, not because they don't have their own value, but because they're all swimming in the same ocean. And right now, Bitcoin is what creates the tides. It's a story about liquidity, about market psychology, and about automated trading. And all this leaves us with a really fascinating question for the future. We can see Bitcoin's gravitational pull is getting weaker, but what's it actually going to take for a project to break free? What's that magic combination of tech, adoption, and market maturity that will let the first major altcoin finally achieve escape velocity and forge its own path? Well, that's the next chapter we all get to watch unfold.